What's up, investors? It's the Russian dude. Let's immediately talk about the most recent PCE inflation report, which showed that the inflation literally froze. Which, if you think about it, it's not that good of a thing, and here's why. So the most recent, the US core PCE price index month over month came to us at 0.2%, the previous one was 0.3%, and the US core PCE price index year over year came to us at 2.8%, as the previous one was exactly the same, 2.8%. So as you can see, there is a small increase, but increase nevertheless. The overall inflation fight progress has frozen pretty much at the moment of recording this video completely, and as you can see, even some particular separate individual inflationary metrics, such as for example this PCE report price index, they do show once again that it is started to slowly climb up. Now we have to answer some very important questions. Do we have high interest rates right now? The answer is obviously yes. Does these high rates hurt the economy? Well, not much, but yes, they do. And so will the Federal Reserve then start to decrease these high interest rates while the inflation is barely budging and still above its target? Most likely no. And in return, will they have to start increasing the interest rates once again in order to fight against this once again climbing inflation? This question might be answered at most likely yes. One of the biggest fears of the Federal Reserve was that if the inflation will stop budging and then eventually even starts going once again up, while the interest rates still remain high. And so does it look like that we are going exactly in this direction? Unfortunately, it certainly does look this way. I'm gonna let you guys make your very own conclusions, but unfortunately the outlook is not that promising, at least until the end of this year. And so we already potentially have some very first signs which are presented to us by the market. For example, this graph, as you can see right now on your screen, approximately 71% of world indices, at least at the moment of recording this video, are trading above their 250 days moving averages, which historically was saying that as soon as this percentage crosses 81%, this is when these indices, they are in the zone of being extremely overbought, which is a huge correction sign. With a very basic understanding, this is a strong sell sign, and we are going once again pretty fast to this percentage. Because of this, some smart money and some financial organizations, they decided to kinda go ahead and lock in their profits, not trying to risk it all, trying to get extra percentages, couple of percentages of gains. So they started selling their positions. As a result of this, according to the CNBC, this week, which ended on Friday, May 31st, was the first week which closed in the negative territory since the last 6 weeks. And yes, I can agree that we are not right now in the total catastrophic position as we speak, but there are some very concerning signs. We should definitely take them into consideration and be very careful about our investment decisions in the near future. And obviously, whenever the stocks are not looking promising, people tend to switch to alternative investments, such as, for example, fixed income securities like bonds or treasuries, commodities, or even cryptocurrencies. So let me right now give you a very brief update, like 2 minutes or less, from the crypto market. First of all, according to this graph, Bitcoin whales, which have at least 10 Bitcoins in their wallets, they started accumulating Bitcoins, which historically was a relatively bullish sign. You can see this similar graph from 2020, which pretty much exactly the same thing happened. Bitcoin whales start accumulating Bitcoins, and then eventually it did lead to a relatively good growth of Bitcoin price itself. And just some more reasons why crypto markets look right now a little bit more mature and why we might see some very good growth opportunities, particularly in Bitcoin, is obviously the approval of Bitcoin ETFs, which happened not that long time ago. And as you can see from this graph, the spot Bitcoin ETF by BlackRock reached $20 billion under management in absolutely record-breaking number of days. Only took them 137 days. And the second fastest growing ETF was by the JP Morgan, called JP Morgan Equity Premium Income ETF. And guess what? The very same $20 billion, it took them 985 days to reach this number, which is like what, 6 times slower than Bitcoin ETF. We can also see that right now Bitcoin is approximately in the middle of its bullish post-halving cycle, as you can see from this graph, and these cycles usually last around 12 to 16 months, so potential growth is still ahead of us. And another relatively good sign, which might also potentially give a little bit of boost to Bitcoin's valuation, is that the US Congress recently banned the Federal Reserve from creating its own CBDC, which is the central bank digital currencies. Even the ex-president of America, Donald Trump, he also mentioned in case he is re-elected for another term, there is no way those CBDCs will be approved in the US government under his administration. And since those central bank digital currencies are also cryptocurrencies, in some way not particularly entirely competitor to Bitcoin, but it is a crypto asset nevertheless. So in case they are not being approved by the US government once again, this is a potentially good sign for Bitcoin in general. Well, there you have it, guys. If you found this information informative, please like this video, subscribe to my channel, helps a lot, and see you tomorrow.